Hey everybody, welcome back to the channel. So today I wanted to talk about why I believe buy and hold is still the best strategy when investing in the market. So there are a lot of financial commentators who will say that the days of buy and hold are dead, but I disagree. And I think the example of my YouTube channel and YouTube portfolio also shows that buy and hold can still thrive. So I started this channel on 5th June 2019, and at that time I started with a capital of about 117,000 plus, right? And I said in my next video that my strategy will be very simple. I will buy businesses I can understand. These will be high quality businesses which have moats. I will try not to overpay, and after that I just do nothing. So basically I buy and I hold. And it's a simple philosophy, and it's something I've kept true to so far this year. So you can see here from the start of the year, I've been collecting some dividends. I added some funds here. Been collecting some dividends, and I've only made 4 buys this year, and I'll point them out. So I've collected some dividends here. I've put in some more money here. I think my most recent buy was on 3rd of June, and I bought some Alphabet shares. Before that, 20th of May, I bought some Alibaba shares. I picked up some Intuitive Surgical shares as well in April. And I bought some Boeing shares as well in March. And other than that, you can see there have been no sales at all. So I think that has worked so far for this account. So overall, I've added about 8,500 to the account, and I have made nearly 30,000 in terms of stock price appreciation. And so I think it's very important to stay true to that principle. And I know this year has been a very good year for the market overall. I mean, if you look at the major indices, they're all up significantly, right? But we've outperformed the S&P 500, which has done 20%, and we have done much better, and we have done about almost 28%. So that's where picking the high quality companies comes in. But the essential trick is really to buy and hold and not to sell. So what do I think is long term? I think at least 5 years is a reasonable period. So I wanted to point out this graph to you. Basically, it shows these are the different returns in different years, and this shows the 5-year annualized return ending in that particular year. So you can see here, if you look at it over a 5-year period, even in 1974 when you had a very big decline, but if you consider the past 5 years ending in 1974, the decline would have only been minus 2.35%. So not too bad. And of course, later we know that all these declines will eventually erase and the market just keeps going higher. But for that 5 period, you would have only lost this small amount. But you can see here, in most 5-year periods, you make a lot of money. Those are all these green bars here. In some 5-year periods, you even made 20%, right? And then some you lose a little, here and here as well. But in most, you make a lot of money. So what stands out? There have only been a few negative trailing average 5-year annualized return periods, right? And there haven't been much. So I think the stock market provides as good as a guarantee as you can get in terms of making money, but you have to be prepared to hold for the long term. Over the long term, buy and hold investors are still betting 1.0. Each and every correction the S&P 500 that the S&P 500 has undergone since 1950, a bull market rally has eventually erased the entirety of the decline. And in 22 out of the 36 corrections since 1950, it's taken less than 105 days for the stock market to find the bottom. So I think that's very important as well. So I mean, not only has every decline been erased completely, the period the S&P 500 has been in decline hasn't been that much. So on average is about, let's say, 3.5 months. Let's look at that in a bit more detail. So the question is, how long do these corrections typically last, right? So this chart shows how long the corrections can last. So in 1915, for example, we had a decline of about 14%. It took 35 days for the market to be in correction. And most of the time, the market is in correction for not too long of a period. There have been some where the market has been in correction for a few years. That's in the crash of 2000 and also in the crash of 2007 to 2009. But even in the worst crash, right, this was, let's say, it's about 2.5 years, right? So if you had held on and you had continued to be a long-term investor, we know that the decline was eventually erased and you would have recovered your money and you have made much more money, in fact. So it's very important to take a long-term approach. The other important thing, I think, is that we don't want to try to time the market. And I think this research that was done by JP Morgan is very important. So basically, this research shows, some of the best days in the S&P 500 over a 20-year period between Jan 3rd, 1995 and 31st December 2014. So JP Morgan found that investors were held throughout the entirety of the 20-year period, which includes both the dot-com crash and the Great Recession, gained an average of 9.9% per year, or 555% overall great returns. That return trounces the rate of inflation. However, if investors somehow miss just over 30 of the S&P 500 best days over this 20-year period, then the aforementioned 555% gain would have been entirely wiped out. So basically what it's saying is that, if you have tried to time the market and, sell when you feel the market is too high, and then try to jump back in when you feel the market is low, you could have probably missed some of these 30 days. And if you had missed those 30 days, you would not have had any gains at all over that 20-year period. So I think it's very important that we, stay true to the long-term buy and hold philosophy. Of course, there will be stocks that I will, sell over time, but they'll probably be because there's something fundamentally different in the thesis behind why I chose that stock. But over the long term, I think if we can stay true to that philosophy, I think we will do very well. Thank you for watching and have a great day.